Welcome to Bar Chart's series of educational webinars designed to enlighten you about a variety of investment ideas and trading concepts, and demonstrate the features and tools Bar Chart provides related to these concepts, and offer some traders insight to help you make a more informed decision. Today's subject, the truth about the death cross and what every trader should know. Now, if a rising tide lifts all boats, then a falling tide exposes cracks in the hull, structural weakness. The death cross, a technical signal triggered when the 50-day moving average sinks below the 200-day moving average, is one of the market's most telling signs of that weakness. Yet, like all technical signals, there needs to be context and confluence. And the death cross is no difference. Sometimes it's a tradable signal, and other times a confirmational indicator. Hello, everyone. My name is John Rowland, Bar Chart Senior Market Strategist. And today we're going to explore the death cross, the difference between actionable signals and confirmational indicator. Its historical context with the broader indexes and a discussion of trading applications and practical conclusions aligned with the death cross, and some common mistakes to avoid. So stick around as we navigate the rough seas of the death cross and hopefully lead you to the safe harbor of understanding and action. Now, before we get to that, this is where I typically introduce our project director, Gene Baker, but Gene's on assignment this week. So I've asked my co-host from our Friday show, Market on Close, to step in. So Thomas, hello. How are you doing today?
I'm good, John. How are you?
Good. You excited to be a moderator?
I am, and this is a great one for me, John, because for those of you who follow us on X, John, I tweet about death crosses all the time. You know, it's kind of a mixed feeling. Some people love them, some people don't. So I'm curious to hear what you have to say about them today.
Well, I think I'll give some good enlightenment, and we'll definitely discover that not all death crosses are the same. So let's get to it, all right, Thomas?
Let's do it.
All right. Just a reminder, today's session is for educational purposes only, and decisions to buy, sell, or hold or trade securities, commodities, or other investment involve risk and investment made on the advice of a qualified financial professional. And under no circumstances shall we be liable for any loss or damage that you or anyone incurs as a result of any trading or investment activity that you or anyone engages based on any information or material you receive through barchart.com or our services. Okay, so what is the death cross? Well, it's pretty simple, but it's also very powerful when it comes to market analysis. It's when the 50-day moving average crosses below the 200-day moving average. Now, it's viewed as a bearish signal or a potential shift from bullish to bearish trend. And it's more relevant at a daily chart, but it can be applied to weekly and monthly charts for long-term cycle analysis. And for all intensive purposes, it's a lagging indicator, confirming weakness after a downtrend has been started. And you might need additional information, context, and confluence of other technical analysis or indicators to make it tradable. So let's do this. Okay. So some of the common interpretations around the death cross. First, it is a trend reversal signal when bullish momentum has faded and the longer term selling pressure is dominant. So you can see example here and example here. Second, it's a bear market confirmation. But when combined with other signals, for instance, a break of major support or declining volume, as we see right here. Now, sector underperformance can reinforce the thesis of the entering a bear phase. So something like breadth and sector view can be important in determining the death cross. So here, for instance, I am using our screener on the S&P 500, and I'm just looking for those companies that are exhibiting the death cross. And we can see that about 330, or about 2/3 of all S&P stocks, or excuse me, stocks in the S&P 500 are exhibiting the death cross. So we could watch this to tell us if how many of these stocks are showing the death cross, and are the numbers rising or falling. Can also indicate greater market weakness. Now, from the sector level, the death cross could be important for sector rotation. So here, for instance, is the XLE, the energy sector. And you can see for weeks here, since about October of last year, the market has been fluctuating back and forth, giving us multiple death cross signals. And then only until recently do we have seen a very dramatic price action. But what this is telling us is that money is rotating out of the energy sector and probably into other sectors. But for individual stocks, the death cross is a sign for long-term investors to seek out better candidates, those that are exhibiting better trend conditions. Or we wait and establish a set of conditions that would allow for consideration of investment. For instance, a stock price above an upward sloping 50-day moving average. And here we can see a market that has had the death cross, but is well above the death cross value. So what are some historical contexts? Well, since 1998, there have been 13, including the one that we just recently had on April 14th. And again, if I go to my slides here, these are some of the more notable ones, some of them that were more distinctive. Now, what makes some death crosses better than others? Well, the first would be, when the daily death cross and you have a declining trend on a weekly basis. That'll hold more weight. The other thing you'll notice is that they occur every about 2 to 4 years. And also notice that during prolonged bear markets, the 2000, 2003, and 2007, 2011, you'll have a cluster of death crosses. So the interpretation is that in the short term, it tends to be negative, but in the long term, results are mixed, and often depending on macro conditions. Things, for instance, like the Fed tightening or weak breadth, advanced declines, and breaking major levels of support, sometimes a trend line or a trend line break. Now, sometimes the worst of the decline has already occurred, or a bottom is within a near term, let's say within a few weeks or a month. Notice the death cross here on during COVID. Let's make this a little bit bigger. Where the market had already fallen dramatically and then a bottom had occurred. Now, about a third or 30% or so of death crosses result in false signals. In other words, meaning that the market recovers quickly within weeks or months. So you can look at some of great examples here back in 2004, 2006, and 2010. So to sum up, the death cross are more ambiguous, and they're better for confirming weakness than predicting crashes. So what are some trading applications, or how can we apply the death cross to our trading? Well, the first is, since it's a better sign of weakness, it's a good sign to trim long exposure, especially for those of us who are maybe swing or long-term investors. Now, trading opportunities, we're going to look for rallies to short. And then what we need to do is we're going to look for that context and confluence. We're going to learn to combine other technical analysis, for instance, like the RSI being below 50 or a MACD line below 0. Or we can look at things like birds of a feather flock together, bearish breadth, over the market internals. We can watch for rising VIX. Typically, a VIX greater than 20 is a sign of a nervous market. And most times when you find a death cross, you will see an elevated VIX. But we can talk about macro. For instance, the Fed recently, tariffs could have been the trigger that set off this death cross. Now, the importance is to look for confluence, not only in technical tools or macro internals, but on the charts, moving averages, a breakdown through support, a failure to recapture resistance levels. But we don't take the signal. We just don't short because your market or your stock has signaled a death cross alone. So what are some practical conclusions that we can take? Well, again, like I said, it's not a catch-all. We just don't take it as is without other confirmations. So we're going to look at some tools in a moment. And so the ADX is a great tool. It's a trend filter. MACD is a momentum, but it also can confirm trends. And then we can think about those macro contexts, what's going on in the big picture. We'll look at, for long-term investors and swing traders, again, limiting our exposure, tightening our stops. Maybe you've had a trailing stop that is 50 days away from current price. I mean, the lowest price in 50 days. Maybe you raise it up to 40 days, or you look for stops where you make a new monthly low versus, let's say, a 6-month low, and taking profits, raising cash, and weeding out those stocks that are underperforming. We'll start looking at combining those secondary technical accompaniments, market breadth, volume, and the VIX. And once these have been identified, these confluence signals, we'll still patiently wait for a rejection at the 50 or 200-day moving average, or in combination with some near-term swing highs. So some trading concepts that, again, I'm just going to reiterate here what we're going to do. So for short setups after the death cross, we're going to wait for rallies toward the 50-day or 200-day moving average and wait for a rejection. Our stop will be placed at the rejection moving average or at the recent swing high. And then we'll set a target of previous support level or a measure move from a prior top. So one tool you can use for measure moves is Bollinger Bands, and we'll look at that in a moment. We're going to fade false signals. Either we're not going to take them or we're going to wait for greater confirmation. So not all death crosses lead to large declines. So there's a lot of whipsaws that are common. And when we trade with trend indicators, for instance, the ADX, we want to make sure that our ADX is signaling a trend. So an ADX less than 20 is a weak trend and is a signal that we want to avoid. And again, we can confirm false signals with volume, RSI divergence, and again, market breadth. So we'll look at deathcross plus the MACD and the RSI as confirmation. So we'll use the MACD as it crosses below the 0 line. That will be a confirmation of a downtrend. Or the RSI breaking below the 50, that would be another confirmation of a breakdown or a downtrend. And this is going to act as a multi-indicator confirmation system. And then again, we need to be aware of event-driven enhancements. Again, those macro catalysts, rate hikes, earning seasons that coincide with or follow the death cross for these volatile exploitations. All right, so what we're going to do is I'm going to demonstrate a show on the S&P how you can apply the death cross and these individuals in the process that I'm going to show can be used on individual stocks as they signal death crosses. But the purpose of this exercise is to demonstrate the tools that can be beneficial in determining if a death cross is more confirmational or actionable, and how we can manage that risk. So we're going to start here. You can see I brought up the S&P, and this is the most recent death cross. But we're gonna come back to this. We're going to first learn some technical tools, and then we'll revisit today's death cross, and we'll see why it's most difficult to decipher. I noticed that we already have a question on the board, and so maybe we'll be able to answer that question before we revisit this particular death cross. Okay, so let me do this. I'm going to blow this screen up. And I'm going to go back a little bit in time. Here we go. All right. Okay, so here we are in March 2022, and we can see there's a lag effect. In other words, the death cross comes after an extended down move. That is very typical with death crosses. So a bottom might be in place. So it's important for us to look at some trend confirming tools. And so the first one I said that we can look at under standalone studies is the average directional index, the ADX. I want you to concentrate on two of these variables, the negative DI line, which is represented in purple, and the black ADX line. The negative DI line represents negative trend or a bear trend, and the ADX confirms it. Now, typically, Wells Wilder will tell you that somewhere's above 20 for the ADX and above 25 for the DIs. So we can see here, here's our cross. But what is our DI doing? Our DI has fallen through our ADX. That is a sign of trend weakness and a potential of trend change, even though the DX is elevated at the 30 level. Again, what it has already done is it confirmed this downtrend, but seems like the ADX line and the DI line are warning of us of a potential weakened trend or a change in momentum. So can we look at momentum? Yeah, let's look at another standalone study. MACD oscillator. Again, let's look, where's our crossover here? And you can see that our MACD at the time of the inception of the death cross is actually doing a positive or a bullish signal, a crossover where the MACD line is crossing over the signal line, and we see positive histogram, in other words, positive momentum. So again, this signal is in conflict with our death cross. So what's another way we could look at it? Well, we can look at something called the relative strength index, which sometimes can be a leading momentum indicator, but it also can be used to determine trend. And again, if I look at where we're at, yes, the RSI is below 50. That's usually a signal of a bear market or a downtrend, but our RSI has turned positive and is now moving up. And plus, if we look at this in terms of our chart, where we're making newer lows in our chart, but we're not making newer lows in our RSI, this is called a positive divergence. This is a sign of a potential reversal. So again, a death cross in this case is more of a confirmational indicator and not something that is tradable. But what we could do is wait for the market to retest the 50 or 200-day moving average and then wait for that rejection. Let's go back a little bit here in time. Again, very similar conditions and back in during the COVID, right? Here's our death cross here, but price has already fallen very dramatically. What is our DI doing? Well, our DI has already started to fall. Our ADX line is falling, showing us a weakening trend. What did our MACD do? Our MACD had a deep low level crossover, and our RSI, again, a positive divergence. So again, this would be a signal that I would avoid for trading little actions, but it is a confirmation of a down or potential bear market. If we look at 2018, we see a different story. And this is how we really want to use death crosses with that confluence of other technical indicators. Here we're seeing the death cross as price is rolling over with the moving averages. What is our DI line? Well, our DI line is rising. Our negative DI line is rising. What is our ADX line? It's still elevated, and it is telling us that there is a potential trend. What is our RSI doing? And what is our MACD doing? Well, our MACD is below the zero line and trending lower, right? Momentum is trending lower. What's our RSI? Our RSI has just peaked at 60 and is now fallen through the 50 level. And this is indicative of bear or down trends that you will see a shift in the RSI. And this is a dynamic of RSI that it rarely will get above a 60 value in a bear market or a downtrend. And the confirmation of that trend is when it falls through the 50 level. So these signals are ideal as price rolls over with the averages. This is how we use the death cross as a trading signal instead of a confirmational indicator. Now I'm going to go, give me a moment here. I'm going to go back, way back in time. And I want to kind of show you 2007. So I got to kind of get this going here. Okay. This is the 2007. Again, let me kind of see if I can widen this out a little bit so we can see it a little bit better. All right. Again, Here's our MACD, excuse me, our moving average crossover, our death cross as price is falling with the death cross. Our DI is rising, our ADX is rising, our MACD has fallen through the zero line, and our RSI again has failed to get above 60, peaked, and now has fallen through the 50. Here would have been a great signal to take a potential short trade. So let's go back to our current market and we'll look at all of those indicators. Okay, so what do we see? Well, first of all, the signal has come after a very distinctive drop in price. This is what makes this a little bit difficult for us. What is our ADX doing? Well, again, our DI line is below our ADX. ADX does say that there is a trend, but this trend might be weakened because the DI line is below. What is our momentum here? Well, our momentum indicator, our MACD, is below zero. Again, more of a conformational. And our RSI, again, is below 50. So both of these here are saying, yes, you have a trend. Yes, we are in a downtrending market. And this is post death cross signal. But what was the actionable trading for the death cross? Well, we said we want to wait for price to return to test either the 50 or 200-day moving average. Test it and reject it. Well, we've tested the 50. We're just below the 200. And we can look at confluence in terms of swing highs. This is represented by this box here. So a failure to get above the 200-day and then falling back below the 50-day would be that rejection confirmation for a potential tradable signal. And this is what makes this current death cross difficult. But sometimes what we can do, and especially when I'm getting mixed signals, it's important for us to take a step back. In other words, to look at our signal in a higher time frame. And so what I've done here is I've gone to a Bollinger Band template I have, but if you want to look for Bollinger Bands, you can find it here on an overlay. And I'm going to change my time frame from daily to monthly. And so here's some rules that you can use. If at the time of the death cross, the weekly Bollinger Band price is found on the lower band, this is probably a signal that you are near the bottom. Now, it doesn't mean the market can't go lower, but there is a greater anticipation of what is called a mean reversion. In other words, price to move higher, as we have just seen here recently. If price is found at around or below the mean, then this is where the death cross becomes more tradable. In other words, an actionable downtrend. So you can see here our death cross is right there. We're waiting for that retest, right? Confirmation, and then our downtrend. Outside the weekly Bollinger Band, just a confirmational indicator, not a tradable signal. At the Bollinger Band, mean, tradable, actionable, waiting for that price action. Okay. Just double checking my notes. Okay, so let's go back to our slides. So, well, actually, let's do this first. So here's a question that we might be getting, and that would be, How can I find death cross opportunities? Or we've talked about some other tools, for instance, breadth in the VIX. So let's look and see where and how we can find death crosses. Okay, so let's go to here. First of all, under our stock screener, we can go to stock screener, and actually, let's do this one first. In our investing page, under stock screeners. Much better, John. Thank you. We have a pre-designed screener for death crosses. Now, this is going to give you those companies who have the death cross is happening today. Now, it's really based on the close of the day, but you can get a death cross prior to a close. So in theory, you could get a death cross and the market could rally, and then the 50 might get back above the 200 and not get it. But this is where you're going to find those companies or those stocks that are doing the death cross actually today. Now, let's go and look at a couple of these. So I'm going to go to Alaskan Air. I'm going to our flip charts. Again, I have a template where I just added all of those indicators that I just talked about. And so what do we see? Well, here's the crossover of the 50 versus the 200. But what is our ADX doing? Well, our DI positive is above our negative. That's not a good sign. Our MACD, yes, it's below zero, but it right now has a very strong or upward sloping positive momentum. Just means that we might need to wait for a better scenario. And where is our RSI? Well, our RSI, again, like our MACD, is upsloping and above the 50 line. So this would be a death cross signal that we would reject, or this could be a potential false signal. Now, if we look at, for instance, EP, we get a little bit of a different story, right? Our DI line is above our ADX. Our ADX is upsloping. That is confirming a downtrend. Our MACD is below the zero and sloping downward. Another confirmation. And our RSI is definitely downsloping and well below the 50. But again, let's take that moment to take a step back and look at this from a different perspective. And what do we see? We see that at our death cross today, our price is found at the lower Bollinger Band, which means there might be a higher probability or an anticipation of the market to snap back or rally. So that means that what we want to do is wait for that opportunity, wait for that death cross, wait for that test of those moving averages. So again, here is a signal, but again, we're going to be patiently waiting for a better entry. All right. So again, let's go back to our screener. So I'm on our stock screener. And you can screen for death crosses. And so there's a different way we can screen it. So under our opinion indicators, which when you ever look on any one of our pages, it'll talk about bar charts technical opinions. This is one of our opinion indicators, which is the 50 and 200-day moving average crossover. And we're going to look for that crossover signal, not the strength or the direction. We don't even need to worry about the new cross signal. That's would be found on our investment page. We just want to see those stocks that the 50-day moving average is below the 200-day moving average. Again, the signal needs to be the sell signal. And again, I showed you this on the intro. Right now, there's 331 S&P 500 stocks that are 50-day moving average is below the 200-day moving average. All right, so what other indicators or internals, macro internals that we can look at? Well, we can look at a market breadth. So under market momentum, under stocks, this is a great breadth. So here you can see advances versus declines. In other words, you know, what issues have gone up and how many issues have gone down. Again, if you are trading an individual stock, but the broader market breadth is positive, for instance, as we see today, then that might be telling you that even though you have a death cross, you might want to wait for a more optimal entry. We can also look at this in terms of new 52-week highs and lows. Again, in a bearish market, we'll probably see a greater number of new 52-week lows than 52-week highs, probably somewhere in a 2-to-1 ratio. We can go to market performance, and we can look at which sectors are performing or non-performing. But I would draw down here, and you can see that the S&P here is telling us how many stocks are above their moving average. So again, if you subtract from 100, that would be how many are below their moving average. And this is a great way to look at breadth. For instance, if I click on the 50-day moving average, it says 57% of the stocks in the S&P 500 are above their 50-day moving average. That means 43% are below. But we do see that of recent, more stocks are gaining their 50-day moving average than losing their 50-day moving average. But maybe we have come to a level where we could see a failure, that signal for our entry. In other words, what we'd want to see here is a negative breadth where we see more stocks below their 50-day moving average than above. And again, we can do that with our 200-day moving average. Our 200-day moving average here is telling us only 42% of stocks are above the 200-day moving average. And again, if I look at that, what do we see, right? This is more of a breadth indication, an indication, again, of confirming what the death cross is telling us, right? We're more likely in a bear market scenario. So those are two ways we can look at breadth. If you're interested in the VIX can be found on our options market overview page. And over here, you can see where it says volatility index summary. There's the VIX. You can just click on that, and you can get a snapshot. So, you know, we have had an elevated VIX of recent, but you can see the VIX is still above that 20 level. And that's telling us that the market still has some bit of nervousness or some bit of fear, which again would be more of a confirmational to any potential trades. Okay. All right, so again, what are some of our common mistakes? Again, let's think about our death cross as a conditional indicator, right? Because it's lagging. But we can also use it to confirm our downtrends, right? And so once we get the death cross, what this does give us is permission to start looking for bearish setups. In other words, short trade opportunities. We just don't jump in there and take them. We still need to wait for those conditions that we want to design those potential trades. Again, another common mistake is individuals, especially when we're talking about individual stocks, is they ignore the broader trend. In other words, you might have a death cross on an individual stock today, for instance, but the broader trend, let's say the 50-day moving average, is still showing just a few more percentage-wise stocks above what would be a really good confirmation would be if we saw that was below, more were below the 50 did. And again, be careful of some macro backdrops. You know, we got the Fed today, that could change the whole dynamics of death crosses. And earnings seasons always seem to have a little mess with volatility. And then finally, you know, not using stop losses. And I can't stress this enough. So a failure to not to use a stop. You know, bear market rallies can be swift, vicious, and lengthy. And did you know that 20%, excuse me, 20 times in the S&P's history, the S&P has rallied 8% or more in a single day. And 13 of those times were in bear markets or during bear markets. So bear market rallies are very vicious. That's why it's really important to respect trends and respect bear markets, because they're very, very difficult to trade. All right. All right, before we do some takeaways, I do see a couple questions here. So one from one of our regulars, Jim. Hey, Jim, how's it going? So I think, Jim, we answered your question. Jim's question was, would the death cross that occurred recently save losses? Well, at this point, yes, the market is higher, Jim. So if you didn't get out, you would have an opportunity to get out of more of your stocks. But I think what we could look at this current death cross is it's giving you permission to lighten up your positions. In other words, lighten up some of your long positions. So is it potentially saving you money? It depends. It depends on your individual stock, but the conditions are telling you that you should probably be lightening up on some of your losses. Yeah, the market has already fallen prior to the death cross. So, you know, again, in your management system, your risk management system, you might have already uh, activated some of your stop losses. In other words, you might have some of your own personal um, trading tools. And I know Jim, one of our contributors, has his own tool. And so let's see what Jim's risk stop management tool. Well, here's the death cross. And it looks like Jim probably would have been exiting just prior to that or right around that. So there's another question is how was the death cross indicator applied to a chart? So again, what I've done here is under bar chart templates, and this is for Jack, under bar chart templates, we do have a golden and death cross, which is just a chart which has the 50 and 200-day moving average on it. So that's a real easy way to do that, Jack. But you can also build it out, right? You could put the 50-day moving on, you put the 200-day moving on, and you could add those other technical analysis. Wayne asks, is the 50 and 200-day indications applicable to the something that's called the mini death cross or the silver cross, I think it's called, on the positive side? That is the 20 versus the 50. And Wayne, yeah, there are a lot of these moving average crossover systems. Personally, I like the 20 versus the 100. But can you apply the techniques that I just showed you? Yeah, I think you can. I think they're very applicable. It's just you're using a different time frame. Okay. I see those questions. Did I miss any other questions, Thomas? I know that you're kind of watching there. Or do you have any questions, my friend? Because I know you said you're very fascinated about the death cross.
Yeah, I think that's all the questions, John. The death cross is fascinating because, sometimes you see it and the stock is just trading very weak into it, John, and the weakness continues. But then other times you see it form, and it's kind of the joke, at least on social media, is that when the death cross forms, it's time to buy because it oftentimes marks the bottom. So it's a really kind of fascinating formation that takes place.
But do you have more clarity now that where you can look at it and say, well, this is a better signal trading opportunity, and or another one that says, oh, I'm just confirming what I've already seen in the big picture, right?
Yeah, absolutely. And one example that just came up to me, John, was Meta. Meta just formed a death cross yesterday. But if you look at the 50-day and the 200-day, it's obviously showing a lot of strength. So the death cross in this case would sort of be, at least by me, John, I would sort of dismiss it for this name.
Yeah, well, so let's look at it and see what it's doing, right? So yeah, well, I mean, I don't even need to look at the technical indicators, right? We have price action is now back above both the 250-day moving average. So this still could be a selling opportunity, but we would probably need the market to not only fall back below both the 50 and 200-day moving average, but it probably have to fall all the way past, maybe this 550 level or even below. So again, that patience of waiting for when the signal becomes more applicable. So yeah, I guess in this case, this would be more of a buying opportunity as long as price stays above both the 50 and 200-day moving average. So this would be a great example of false death cross. Okay,
Hey, John, we
good
got
job.
another question that I think is valuable to a lot of people, which is, can the death cross be applied to Forex, or should it be mainly applied to equities?
Yeah, I think you can use it for all markets. I don't think it just has to be for equities market. It's just that it seems that there's a lot of rules are based on, the 50-day moving average is very, very popular in an equities market. 200-day is very popular. I think in currencies, you can definitely use it because currencies are more of a longer term trending markets. So yeah, for sure. Futures, I would say probably not in the futures market because the futures markets, a lot of contracts roll over in shorter period times than 50 days or 200 days. So you get a lot of seasonal plays in there. So I maybe not as applicable in futures, but certainly definitely in currencies. Okay. Oh, I see a couple more um, question here. John says, can you show weekly Bollinger Band view on the death cross? And John, are you asking about the S&P or are you asking about um, the idea of using weekly, in other words, the 50 weeks moving average and the 200 weeks moving average? But here's the S&P. So again, the circle is the death cross on the daily, and we're looking at the weekly Bollinger Band. So I'm guessing that's what you're asking. Okay, so I think let's end it there, Thomas. And let's go back to our slide. So a couple takeaways here. So again, the death cross equals a signal of a downtrend. So it can be the beginning or the middle, or most likely it's already happened. The market is already, because of its lagging indicator. And it's not always sends us into a crash. That's very important. Remember that it's more about the weakness of the market, not a coming crash. History shows us mixed results, especially when we're looking at the broader market, and that's why context is key. That importance of other technical evidence, ADX, MACDs, RSIs. Where is price in a higher time frame Bollinger Band? What's our breadth? What is our volume? You know, I like to see a high volume preceding a death cross. That's usually a good sign that momentum is going to continue. If I see a large volume at or just after a death cross, that's probably an indication that you've probably found a near-term bottom. Usually you find large amounts of volume, historically high volume, at tops and bottoms. And then again, risk management is paramount. Bear markets are difficult and dangerous to trade in. So investors, maybe it's more about trimming your exposure. For traders or swing traders, you know, let's wait for either improving conditions or those technical analysis that aligns up with the signal that we have discovered. Okay. All right, let's see, next week, I think we're off next week, Thomas. I definitely know that. I definitely know I'm off next week. So we don't have any upcoming webinars. In 2 weeks, we'll have a webinar. Make sure that you give us your email, again, just to get notifications of upcoming webinars. I want to remind you that all of our sessions end up in our archive library, and you can find our sessions on our YouTube page as well. Again, you could just type in a topic or a keyword to look for very specific shows. And again, here, if I click on the Truth About Deathcross, up here, you can see where it says download slides, so you can get those slides that I showed today. All right, Thomas, thanks for stepping in for Jean. I know she's very happy that you did that. I appreciate all your help. Folks, until next time, best of health, manage your risk, and the good of all trading.